Hello everyone. COVID-19 has had three impacts on the real estate industry. First, it triggered a recession that has highlighted the resilience of property types such as residential, food-anchored retail, and logistics. Second, it accelerated megatrends, including e-commerce adoption, which is reshaping the retail and logistics landscapes. The pandemic also created a more robust demand for digital infrastructure, notably data centers. Finally, the post-pandemic world is challenging long-term industry beliefs such as the dominance of the 24-hour city. Institutional investors in European real estate need to assess what these trends mean for their portfolios. At PATRIZIA, we believe the market is on the cusp of significant changes. When we look at the United States, a market that has undergone tremendous changes over the last decade, the same megatrends are evident. Although there is a lag, these should have similar effects on Europe, albeit with local nuances. Notable, in the United States, it was residential, industrial, and logistics assets that drove growth at the back end of the last decade, not offices or retail. That implies that retail and office assets, which still account for the bulk of typical institutional portfolios in Europe, will become less dominant. Retail exposure has been shrinking in Europe for the last decade anyway, while residential and logistics are gaining importance in institutional portfolios. We also see a broadening of the real estate asset class that will help investors tailor and diversify their real estate exposures. The US experienced a spectacular growth of alternative property types over the last decade. However, the US is a guideline, not a blueprint. We believe healthcare and alternative living are attractive in terms of best risk-adjusted returns, scalability, and diversification potential in Europe. We also see the knowledge economy as a driver. Many popular university towns throughout Europe lack enough purpose-built student accommodation. It will likely take more time for the wide acceptance around tech-oriented property types to move from alternative to established property types. Still, we see huge potential for investment opportunities in infrastructure around energy and technology from a risk-adjusted return angle. For investors seeking to create a future-proof European portfolio, the challenge will be finding an access route to alternative assets. Unlike the US, these routes do not exist through the listed sector. This means that choosing a partner who can provide, source, and develop the product effectively is very important. This is critical as many alternative niche property types need to be built or go through active asset repositioning. At PATRIZIA, we do not invest in a niche that will stay a niche forever. We invest in a niche that has the potential to be scaled and become mainstream over the next 5 to 10 years. In 10 years to 15 years, we believe that it will be easy for the average investor to invest in, say, senior housing or data centers as it is today to invest in an office asset in Munich, London, or Paris. By then, property and facility management services will have been extended to cope with the expanding demand, and these successful niches will have become mainstream. We aim to be ahead of that curve. To learn more about PATRIZIA and the future-proof European portfolio, please visit www.patrizia.ag.